broadcasting around the world. This is the Hard Asset Money Show. Your wealth, your money, your future. Serious talk about what's happening and how you profit. Hosted by Christian Briggs. Follow him on X at BMC_HAM. Live in 3, 2, 1.
And joining us now to discuss the trade deal is Christian Briggs, economist and CEO of Hard Asset Management. Christian, good morning. Thanks for coming on.
Thanks for having me. I look forward to this. This is a great topic, too.
Christian, exactly. We just heard that over the next 3 years, Europe's set to import $750 billion worth of U.S. energy. That's partly LNG, partly oil and nuclear technology as well. It all sounds good, but will it possibly increase energy prices for Americans?
No, actually, this is going to lower energy prices. In fact, this was probably one of the best played tariff deals that Trump has done so far. When I say that, energy is one of the bedrocks to the United States' economy. When we have strong energy export opportunities, and especially with this much, this is almost $1 trillion. Liquefied natural gas is a really good product that Europe needs. They've been buying it out of Russia. So the impact of this much LNG that's being sold to Europe, taken away from Russia, is going to add lots of jobs to United States energy. The energy sector, whenever they hire one person within that drilling, distribution, pipeline, or transportation, that can reverberate up to 4 to 5 jobs, and those are high-paying jobs. So I will say that Trump played really well on the energy sector, and that could be one of the best parts of the entire tariff deal.
It's an enormous amount, $250 billion a year, $750 over the next 3 years. Like, what kind of investment will be needed on the U.S. side? Are we ready to just supply them with this amount of energy?
Oh, okay, great question. Actually, I have about 2 to 3 parts in that question, but it was well said. So the first part is, what does it value to us as our society, our culture, or just our economics? First of all, the U.S. leads the world in energy production, transportation, distribution, low-cost, high-quality oil. Our oil is some of the best oil in the world when it comes to clear, quality, and less contaminants. Natural gas is the same thing. So we have the best products. Now, here's how it's going to reverberate into the country. $1 trillion will be needed to provide that infrastructure. Now, it may not be a direct amount of cost or investment by the energy business, or at least certainly companies, but that $1 trillion or thereabouts that's going to come in over the next 3 or 4 years. And this is not going to be just a 3-year deal. This will be extended. We have the lowest cost provider of LNG and the highest quality. So the investment alone that this country is going to see from both local operators or overseas investors that want to come here for this, I think it's going to be $1 trillion win, not just from the selling of the product, but from the direct investments over the next 3 to 5 years. And let me just add this to you. When this type of money is being utilized in both the construction and ultimately the distribution and transportation of this LNG, those jobs are incredible. Some of the things that people are starting to say about the tariffs, the positives and the negatives. Listen, there are no negatives really in the tariff deal on the U.S. side. Now, Germany's going to have a little bit of a hit on their cars from the 15% tariffs. Our exports are going to now be lowered from 10% to 2.5%. That's a win. But the energy independence that Donald Trump is focusing on when this tariff deal, that's what he really focused on. How much energy can I sell Europe, take away from Russia? That helps America way more than just selling some widgets. Could be cars, could be planes, could be whatever it is. He was so on point by using the energy as pretty much, I think, the bedrock.
The deals all start on August 1st. Most of the deals, other than steel and aluminum, which we've been getting 50% tariffs from, I guess, just about everybody.
This is such a great deal for America. I'm real proud to say that it's one of the best deals I think anybody could have negotiated.
You're right. It seems to be a geopolitical strategic element to this deal as well. Christian, there's 2 big major parts to the deal. On the one hand, we just talked about it, the energy. On the other hand is the commitment from European companies to invest an extra $600 billion into the U.S. economy. Where do you expect that money to go?
Oh, that money is going to go into all sorts of manufacturing. With the low-cost energy that we have here to manufacture. And then with the dollar weakening, which some people don't like that, it's not a bad thing. The dollar has weakened a little bit with the euro, about 10%. That makes our manufacturing environment a lot more affordable. Certainly it makes it more intriguing for overseas manufacturers. But you got to understand this energy framework, there's going to be a lot of that $600 billion that's going to come into the energy sector. It's not just from drilling, but also distribution, transportation, your carriers, your long haul LNG ships are now going to boom coming from America to Europe. There's a whole amount of people that are going to benefit from this. And it's not just the energy. Look at the ports that are going to provide the incoming and ongoing onboarding and offboarding of those ships. So I look at it from a couple different strategic standpoints. One, we are selling a product that we're able to get a high margin, high-paying jobs, increasing that $600 billion. The question that you asked earlier, and I'm going to give it to you. It's going to help every area. It's going to come in manufacturing. It's going to come in the energy sector. Don't be surprised if you see deals from car manufacturers overseas coming in here. This is about a $2 trillion trade deal within the next 3 to 5 years. It's a win. The only parts that may be a little bit on the short-term pain will be some of the tariffs, where obviously the lower middle class will see some inflationary pressures. But I think that the GDP growth next year is going to more than offset some of the inflationary pressures that we're seeing in the short term.
Interesting. And we hear Trump as well talking about potentially giving tariff rebates, DOGE rebates, whatever. So I think the administration is thinking about the potential impact on the lower middle income people. What was interesting, Christian, we had Ursula von der Leyen say that they wanted to, part of the deal was to bring down this trade deficit that America had with the European Union last year. I believe on goods and services, it was like $161 billion trade deficit. Do you see this as a big problem, this size of a trade deficit?
Well, it can be. Look, for everybody that's kind of watching, trade deficits are basically the extraction of cash within the society, within our American borders, so to speak. It's when we're spending more than we're receiving. So that cash goes out. That doesn't come in. It doesn't get to recirculate within the economy, whether it's local, state, or even on the federal level. So by taking that deficit of 160 plus billion and narrowing it down to probably 50 billion, that's a small, negligible amount of money that we can easily absorb, that then the GDP from both the energy sector, the aerospace, the commercial airlines, because they both Airbus and Boeing are going to benefit from this. And then again, car manufacturing, and then just infrastructure increasing in manufacturing. Forget the 50 or 100 billion, whatever the trade deficit may be at the end of the day as it kind of narrows, the GDP value alone way more than makes up for this. I don't care how the Treasury slices dices it, they're seeing the same thing we're seeing. This is all about wonderful revenues, but more importantly, bottom line growth. And the bottom line is going to come from some of the bottom of the economics. In other words, where used to be the wealth sometimes trickles down, this deal is much better. This is the wealth is going to start at the bottom and trickle up. Why? Because it's a job creator. See, that's the deal. The energy sector alone, we right now are looking at probably 100 to 200,000 jobs over the next 3 to 5 years that will be needed just in this deal on the energy sector. Those are $100,000 a year jobs. If you're drilling or your transportation or your distribution, pipeline manufacturing, it's a win. When I saw this deal announced, I got really excited and I said, okay, this is the biggest deal he's done to date, but this is the one that's going to solidify us for a lot of years.
Big numbers. A lot to look forward to. Christian Briggs, CEO at Hard Asset Management. Thank you, Christian. Take care.
All right. Thanks for having me.
Gold has nearly doubled in just 5 years, rising from $1,700 an ounce in 2020 to over $3,300 today. That's a 95% gain, outperforming the market and proving why gold is the ultimate long-term hedge. As global debt soars and currencies weaken, central banks are hoarding gold at record pace. Why aren't you? At Hard Asset Management, we offer award-winning service and fast, secure delivery. Call 844-426-4653 or visit bmcham.com. Protect your future with real assets. Own gold now. Follow on X at BMC_HAM for all news and the latest developments.